Hello, everybody. Welcome to the special series on GS Mains 2019 discussion. As a part of this special series, we have been discussing a number of questions that have appeared in the Mains 2019 examination. I would like to reiterate that the objective of this special series is twofold. One is to highlight the importance of various sources we provide, including the daily news Simplified, the Focus magazine, and the Mains Compass that is released before the mains examination in the corresponding year. Besides, the special series is also aimed at building an approach towards answer writing in the mains examination. In this edition, we'll be discussing this question that appeared in General Studies Paper 3 on GST. Ever since GST was introduced in 2017, a number of questions have been asked on GST in multiple papers, including this one that was asked in 2019. In that, the question read, enumerate the indirect taxes that have been subsumed under GST in India. Also comment on the revenue implications of the GST introduced in India since 2017. Now, before I discuss the answer to this question, let us decode the question. First of all, this question was asked for 10 marks and the answer shall be written in 150 words. Now, the key aspects of the question include 1. Enumerate the indirect taxes that have been subsumed under GST, meaning which we need to list down the indirect taxes that have been subsumed under GST. Besides, the second part demands one to comment on the revenue implication of introducing GST since 2017. As it is evident, this is fairly a straightforward question and requires one to write the answer within the word limit of 150 words. Now, before we discuss the answer to this question, let us look into various sources that have covered the relevant topic. Now, this news was covered under multiple DNS analysis, including that on 4th May 2019, in which the trends of GST collection was highlighted on the completion of 2 years of introduction of GST. In this DNS analysis, as you can see here, a number of aspects of GST collection was covered, including the trends of collection from 2017-18, 2018-19, and up till April 2019. Therefore, the trends that have been discussed in this news analysis can effectively be used in highlighting some parts in the answer, as we will see. Besides, this news was also covered under DNS analysis of 30th June 2018, in which the author of this article had highlighted some of the teething problems in implementation of GST in the initial years. Besides, in July 2018 edition of Focus magazine, the performance of GST upon completion of 1 year was analyzed, highlighting some positive outcomes and implementation issues that were faced in the initial year. Thus, it is needless to say that regular coverage of Daily News Simplified analysis, the Focus magazine, and the Mains Compass will enable the student to consolidate content required for one to answer the questions in the mains examination. Now, coming back to the question read, enumerate the indirect taxes which have been subsumed in the goods and services tax in India. Also comment on the revenue implications of GST introduced in India since July 2017. As I've already mentioned, there are two key aspects to this question. One is to list down the indirect taxes that have been subsumed under GST, and second one is the revenue implications of introduction of GST since 2017. Now, since the question is asked for 10 marks and is also fairly straightforward, it is advisable to avoid writing introductions and conclusions due to the word limit. Therefore, one may start listing down the indirect taxes and analyzing the revenue implications of GST since its introduction. Now, as it is well known, in 2017, in pursuance of one country, one market, one tax, GST was introduced as the biggest tax reform by subsuming various indirect taxes that were present at the time. Now, this complex structure enabled both central and state governments to levy taxes at different stages of product life cycle, starting from manufacturing to sale of goods, including distribution. While some of these taxes were value added in nature, other taxes were non value added. For instance, the central excise duty was levied on the manufacturing activity and was known as CENVAT or Central Value Added Tax. Similarly, the sales tax at the state level levied on the goods that were sold within the boundaries of the state was another value added tax. However, there were a number of taxes that were non value added, like central sales tax, entry tax, entertainment tax, etc. Now, these non value added taxes was set to put a burden on the cost of the product as a result of cascading effect of taxes at every stage of the product life cycle, thereby making the goods costlier. As a result of this, GST was introduced to ensure that the tax burden, especially the non value added taxes on goods and services, is reduced, thereby reducing the general price level in the economy. Now, coming back to the first part of the answer, which requires you to list down the indirect taxes, you can start listing down these indirect taxes under two categories, one at the center level, another at the state level. Now, in all, there are said to be about 17 indirect taxes that have been subsumed under GST. However, it suffices to list down the major taxes like central excise duty that is levied on the manufacturing of goods, the service tax that is levied on delivery of services, the countervailing duties that are additional export taxes, the sales tax or the value added tax at state level, which is levied on sale of goods within the boundary of the state, entertainment tax, central sales tax. Now, this central sales tax is under state level because though the central sales tax is levied by the center, it is collected by the states. Then there is octroi, which is levied on interstate movement of goods, and finally the purchase tax. Now, as I have mentioned, it may not be necessary to enumerate all the 17 taxes, but to list down the most important taxes that are given, which fulfills the demand for first part of the question. Now, having listed down the major indirect taxes that have been subsumed under GST, let us address the next part of the question, which is the revenue implications of introduction of GST. Now, before discussing the revenue implications, it is important to note that there is no data that is released by the government that compares the revenue from the indirect tax structure before and after GST. Therefore, it is advisable to structure your answer based on four factors that affect the tax revenue. Now, the factors that affect the revenue implication of any tax include tax rate, tax base, tax compliance, and tax buoyancy. Therefore, let us understand the revenue implications of introduction of GST under these four factors, including tax rate, tax base, tax compliance, and tax buoyancy. Now, before we look at tax rates in GST, it should be noted that GST was a step towards rationalization of indirect taxes in that it subsumed 17 different taxes that made the indirect tax structure complicated. Now, at the launch of GST, it was believed that rationalization of these 17 taxes into three categories, namely the central GST, the state GST, and the integrated GST, was expected to increase the tax revenue or at least be revenue neutral, meaning which no change in the tax revenue due to tax rationalization. Further, the relation between tax revenue and tax rate is given by what is called as the Laffer curve. Now, as you must be well aware, under GST, the tax rates are classified on the basis of quality of products into five slabs, including 0%, 5%, 12%, 18%, and 28%. While in accordance with this Laffer curve, at a certain tax rate, the tax revenue is maximum, given the multiple tax rates under GST in India has not yielded the desired results. In that, in most of the advanced countries, there is only one tax rate for GST, in a country like India, while one tax rate is not possible as a result of wide inequality that is present in the economy, it is suggested that this multiple tax rates should be brought down to maximum 3 in order for tax revenue to increase. Now, besides, it should be noted that a number of states had opposed the introduction of GST in India on account of losing of some of the indirect taxes that came under the purview of states. Now, in order to compensate for the shortfalls that occur in the state, the Goods and Services Compensation to States Act was passed in 2017. Now, according to this act, if the state's revenue fell below 14% in a year, the center was expected to bridge the shortfall for the first 5 years from the introduction of GST, that is, till 2022. As a result, the central government has been imposing what is called as compensation cess on certain products like luxury items, sin goods, etc., in order to compensate the states for their loss. Now, the recent data on the compensation to states show that the central government has been paying more compensation than what is received under the compensation cess. As a result, this puts an additional burden to the revenue of the central government. Now, due to this additional burden, the overall revenue is said to have decreased. Now, therefore, in short, the complicated tax structure, which includes multiple tax rates and compensation to states on account of shortfall, has resulted in decrease in tax revenue for the central government. Now, coming to tax base, the introduction of GST was expected to bring more people into the tax net as a result of elimination of cascading effect by incentivizing through an input credit mechanism. However, given a number of compliance issues, including the complicated forms coming under the GST net, is not seen as beneficial by a lot of people and therefore has not resulted in increasing tax revenue. However, it should be noted that these are only initial teething problems of introducing a major reform like GST, and a number of steps that have been taken by the government will increasingly yield better tax revenue for the government in the coming years. Now, this can be seen in the fact that the tax revenue from GST has significantly increased from about 7.5 lakh crores in 2017-18 to more than 13.5 lakh crores this year. Now, this trend is expected to continue and bring in more tax revenue to the government in the coming years. Now, besides, a number of compliance issues, including delay in refunds, invoice frauds, have contributed to low tax revenue to the government. As a result, steps like introduction of e-way bill, simplification of forms, expediting the process of refunds, etc., are expected to increase the tax revenue in the long run. Now, coming to tax buoyancy, the tax buoyancy has said to have increased to 1.2 after the introduction of GST. Now, in order to understand this, a tax is said to be buoyant when there is a direct correlation between tax revenue and the growth rate in the economy. For example, the value of tax buoyancy is said to be 1 if a 1% growth in the economy has led to a commensurate 1% increase in tax revenue for the economy. Now, in the aftermath of GST, this tax buoyancy has said to have increased to 1.2 and thus expected to result in higher tax revenue to the government. However, given the slowdown in the economy in general, this tax buoyancy has not translated into higher tax revenues for the government. Therefore, this higher tax buoyancy is expected to yield higher tax revenues as and when the higher economic growth is restored. Besides, the introduction of GST is also said to have a bearing on direct tax revenues of the government. Now, this is as a result of self-policing effect of GST, since claiming full input GST credits would enhance income tax compliance and thus enhance income tax revenue automatically. Now, in conclusion, while the introduction of GST has not yielded in the expected increase in the revenue, it is majorly due to initial teething problems in introduction of a major reform like GST. As a result, the government has been taking a number of steps, as we have mentioned, including the e-way bill, simplified forms, expediting the refund process, introduction of technology including big data, etc., are sure to improve the tax compliance and hence the tax base, resulting in higher revenues for the government. Besides, further rationalization of tax rates to maximum 3 rates will also ensure higher tax revenue to the government that is expected to follow in the long run. As a result, given the word limit of 150 words, it is advisable to straightaway address the demand of the question, including listing down of the taxes and revenue implications as we have discussed today. With this, we come to the end of today's discussion. You may refer to the PDF for the model answer.